So we are back in business now, but they have rejoined. No. So welcome back, folks. Welcome back. All right. A minute, please. All right, back to business now. Sorry about that. So I was saying before that you can research these terms for yourself. IP, DRP, LP, MRP. As we go through further on, you will hear more about them. All right, later on down the road there. All right, we want to look at major financial. A minute, please. No, we look at the major financial markets now. All right, so first look at this primary market versus secondary market. Primary market or secondary market. Primary market or a market in which corporations raise new capital, while secondary markets are markets in which existing already outstanding securities are traded among investors. All right. What this is really saying is that primary markets are the foundation, while secondary markets they come after primary markets pretty much. All right. Hope you get what I'm saying still. So you have primary markets first, and you have secondary markets next. So examples of primary markets now are if Microsoft were to sell a new issue of common stock to raise capital, this would be a primary market transaction. All right. Go again. If if sorry, wrong slide. So if Microsoft were to sell a new issue of common stock to raise capital, this would be a primary market transaction. All right. Example of secondary market. No example. If you decide to buy 1,000 shares, you decide to buy 1,000 shares. 1,000 shares of AT&T stock. The purchase would occur in the second market. The New York Stock Exchange is a secondary market. Um, the secondary market since it deals in outstanding as opposed to newly issued stocks. All right. Go again. The New York Stock Exchange is a secondary market since it deals in outstanding as opposed to newly issued stocks. Next thing you have is money market and capital markets. Right? Money markets are for short term, less than 1 year. High liquid debt securities. Examples of money market are the New York, London, and Tokyo money markets. are among the world's largest. So money markets are markets for short term, less than 1 year, high liquid debt securities. Example, New York, London, and Tokyo money markets are among the world's largest. Capital markets now are markets for immediate 1 to 5 years or long term, more than 5 years. Debt and corporate stocks. All right. Examples, no, the New York Stock Exchange is an example of a capital market. All right. All right. Financial asset market now are markets that deal with stocks, bonds, notes, and mortgages. Financial markets also deals with derivative securities whose values are derived from changes in the prices of other assets. All right. Well, again, um, financial asset market markets that deal with stocks, bonds, notes, and mortgages. Let me join the people. Let me, please. So, so I was saying that financial asset market are markets that deal with stocks, bonds, notes, and mortgages. Um, Financial markets also deal with derivative securities whose values are derived from changes in the prices of other assets. Right? Examples include a share of Ford stock is a pure financial asset, while an option to she's not giving me give me a time. While an option to uh, is this no? Let me see something. An option to an option is roughing. It's roughing. While an option to buy Ford shares is a derivative security. All right. This not good. I mean, hello. Yeah, as I was saying that so a share of Ford stock is again, sorry. A share of a share of um a share of Ford stock, right? is a pure financial asset. Good? Follow me? A share of Ford stock is a pure financial asset. Right? Good. While an option to buy Ford shares is a derivative security. Good. Maybe wondering what does derivative security mean? You can research for yourself. No, um, no, derivatives are not direct claims on either real assets or their cash flows. Instead, derivatives are claims whose values depend on what happens to the value of some other asset. Go again. Derivatives are claims whose values depend on what happens to the value of some other asset. So if some other asset increase, the derivative value might increase as well. Good, and so forth. Um, so the value of a derivative is is derived from the value of an underlying real or financial asset. Good. Let's continue. So look at now the next one is called commodity. The next one is called commodities markets, also called physical asset, tangible, and real asset markets. Good. So these are different names for commodities markets, right? And they are for products such as wheat. So these are markets for wheat, automobiles, real estate, computers, and machinery. Now look at spot market versus future market. Now, spot markets now are markets in which assets are bought or sold for on the spot. Delivery literally within a few days is done. So spot markets are markets in which assets are bought or sold on the spot, meaning right away. Good. Future markets now are markets in which participants agree today to buy or sell an asset at some what? Future date. Go again. Future markets now are markets in which participants agree today to buy or sell an asset at some future date. Example is a farmer may enter into a future contract in which in which he agrees in which he agrees today to sell, right? 5,000 bushels of soybeans 6 months from now at a price of $9.75 a bushel. Go again. Example is a farmer may enter into a future contract in which he agrees today to sell 5,000 bushels of soybean 6 months from now at a price of $9.75. So 6 months from now it should have increased, but he's agreeing to sell it at the price which it is which it costs today. I don't know. A minute, please. Hello, good morning. All right, gentle folks, I'm back in business now. All right, give me a minute, gentle folks. Again, Yeah, so look at I said before that a few spot markets in which I start bought are sold for on the spot delivery literally within a few days. Future markets now the farmer decide to they sign a contract today to sell in the future. They agree to sell 5,000 bushels of soybean 6 months from now at a price of $9.75, meaning the price can't change in the future. All right. So future markets now are markets in which participants agree today to buy or sell as at some future date. All right. Next, we look at over counter versus over the counter market versus organized exchange. All right. Now, a large collection of brokers and dealers connected electronically by telephones and computers. So over the counter markets now, let's look at it now quickly. Over the counter markets, we are running out of time again. You might need to reconnect with me after this, after a while. So let's continue still. So, so over the counter markets now is a large collection of brokers and dealers connected electronically by telephones and computers that provides for trading in unlisted securities. All right, good. Additionally, stocks are large companies that are traded off the regular stock exchange market. For example, New York Stock Exchange. All right. Then look at physical. You look at organized exchange now. Um, these are physical location exchanges. Sorry, physical location exchanges are tangible entities. Each of the larger exchanges companies. Sorry, each of the larger exchanges occupies its own building, allows a limited number of people to trade on its floor, and as an let me in the books, please. All right. So I was saying that physical organization exchange, so physical location exchanges are tangible entities, each of which larger exchanges occupy its own building, allows a limited number of people to trade on its floor, and has an on its floor and has an elected governing body, its board of governors. All right. So that's for organized exchange. The physical location exchanges are tangible entities, each of which larger exchanges occupy its own buildings, allows a limited number of people to trade on its floor, and and as an elected governing body, its board of directors. All right. Members of the New York Stock Exchange formerly had seats on the exchange, although everybody stood. Today, seats have been exchanged for trading licenses, which are auctioned to member organizations and cost about $50,000 per year. All right, that is US. Organized exchanges are formal organizations having tangible physical locations that conduct auction markets in designed securities. All right, so that's critical for you to know. All right, organized exchanges are formal organizations having tangible physical locations that conduct auction markets in designated securities. All right, critical. Stock market now, where the prices of firm stocks are established, that is a stock market. So, 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 so stock markets now, where the prices of firms are established. The primary goal of financial managers is to maximize their firm stock prices. Knowledge of the stock market is important to anyone involved in managing business. Um, let's look at the benefits now of the stock market. Investing in stock is often risky, which draws attention to the huge gains and losses of some investors. If you manage your risks, you can take advantage of the stock market to secure your financial position and earn money. Go again. Investing in stock is often risky, which draws attention to the huge gains and losses of some investors. If you manage the risks, you can take advantage of the stock market to secure your financial position and earn money as well. All right. Investment gains. One of the primary benefits of investing in the stock market is the chance to grow your money. Over time, the stock market tends to rise in value, though the prices of individual stocks rise and fall daily. Again, over time, the stock market tends to rise in value, though the prices of individual stocks rise and fall daily. Now we look at dividend income now. Some stocks provide income in the form of a dividend. While not all stocks offer dividends, those that do deliver annual payments to investors. Some stocks provide income in the form of a dividend, while not all stocks offer dividends. Those that do deliver annual payments, those that do offer dividends, deliver annual payments to investors. All right. Remember, when the session ends again automatically, please relog in for the next 10 minutes, and we finish that time. Next, look at diversification. That's next benefit. So the first benefit is what? Investment gains. Next one is what? Dividend income. And next benefit of stock market is what? Diversification. For investors who put money into different types of investment products, a stock market investment has the benefit of providing diversification. Stock market investments change value independently of other types of investments, such as bonds and real estate. All right. For investors who put money into different types of investment products, a stock market investment has the benefit of providing diversification. Stock market investments change value independently of other types of investments, such as bonds and real estate. We look at ownership now. Buying shares of stock means taking on ownership stake in the company you purchase stock in. Again, buying shares of stock means taking on an ownership stake in the company you purchase stock in. This means that investing in the stock market also brings benefits that are part of being one of a business's owners. All right. So again, buying shares of stock means taking on an ownership stake in the company you purchase stock in. Uh, this means that investing in the stock market also brings benefits that are part of being one of a business's owners. All right. Our time is expired now, so rejoin as soon as possible, please, as this expires. Rejoin as soon as possible. Rejoin as soon as this